Hey everyone! Last week, as virtually everyone expected, the Federal Reserve held the overnight rate flat in the 5.25% to 5.5% range. Although Chairman Powell remains non-committal, it's widely believed that the Federal Reserve will keep rates stable through the remainder of this year and into 2024. Of course, that's not guaranteed, and there are some signals that the Fed will make one more rate increase this year. But I did note a very important change in the language Chairman Powell used at the press conference. Last June, when the Federal Reserve held rates flat, Chairman Powell explicitly called it a skip, telegraphing the rate increase that came in July. This time, Chairman Powell didn't use the term skip. Instead, he reiterated the Fed's reliance on incoming data while weaving in language suggesting they are open to keeping rates flat. That little language tweak is a promising sign. Now, we really do need 2 consecutive meetings where the Fed doesn't raise rates to call this a trend. So we'll need to wait until the November Fed meeting for more clarity. But Wall Street is already baking in a 74% likelihood that the Federal Reserve will keep rates flat on November 1st, and a 55% probability rates will remain unchanged when the Fed makes their final announcement of the year on December 13th. If the Fed does continue to hold rates flat, that would be a significant turning point for the commercial real estate market. Lenders may finally begin to ease their lending practices. That could manifest in a small reduction of interest rates as lenders begin to reduce their lending spreads, and lenders who have moved to the sidelines may begin to re-engage the market. That would expand the pool of potential debt capital available to investors and support transaction activity. I'm not saying this will all happen quickly. The banks aren't going to immediately jump back in with both feet. But even a very small movement will be a positive sign for the market. It would be a critical step in the process of closing the expectation gap between buyers and sellers. We're already seeing signals that the investment market is beginning to revive. It hasn't shown up in the closing activity yet, but we are seeing it in the preliminary activity stages, like owner requests for opinions of value and buyers signing confidentiality agreements. Although the expectation gap between buyers and sellers is still wide, we are seeing some movement toward the middle by both buyers and sellers. Property owners are beginning to come to terms with the reduced property values of the current market, while prospective buyers have largely come to accept that a massive wave of distressed properties is unlikely. Yes, there will be some distressed property, but it will generally be concentrated in assets like urban office and hotels. But I should point out that the hotel delinquency rate has already begun to come down. The big wave of distress caused by rate increases that many investors expected will likely be more of a trickle. So the Fed's decision to hold rates flat last week may be the turning point we've been waiting for. And investors who've been on the sidelines for the last year or 18 months have begun to test the waters. That suggests more inventory may be coming to market, but it also means competition for properties will likely begin to rise. It's important to note that structurally, most commercial property types are in a healthy position with a strengthening outlook. New supply risks are shrinking for most property types. The cost of construction financing, labor, and materials remain elevated, and that will curtail new supply risks for most property types over the next couple years. At the same time, vacancy levels for most property types, with the notable exception of urban office, are relatively stable in most markets. This combination of stabilizing forces should bolster investor ability to make decisions, and that should begin to revive the commercial real estate transaction market. The Fed's decision to hold rates flat last week is a very positive sign, but we're not in the clear yet. The November Fed meeting will be key. If they hold rates flat at that meeting, as Wall Street currently expects, then we'll have even more clarity. Until then, investors need to keep their eyes on the horizon.